The indecisive nature of the market not only can be seen in the lack of trend movement, but can be seen in each individual trading day where there's really no decisive move. Even though when it was drifting back as far as the Dow is concerned, notice that it did a lot of dojis. Remember, a doji represents indecision between the bulls and the bears. So not only are the markets trading flat, but they're trading indecisively each day. Now, this is not bad for the candlestick investor because it allows for the evaluation, knowing that the market's not moving one way or the other, to analyze which sectors are acting the strongest. And this can be pointed out by the individual ETFs. For example, Labu, the biotech bullish sector that's leveraged 3 times, showing you the bobble pattern or the J-hook pattern breakout. Notice on Friday it did a doji, today it did a gap up. Your best friend signal also producing a J-hook potential. This just allows the candlestick investor to get that much more evidence that the biosectors are being bought. And as illustrated in the MDVN chart, you can see the big fry pan bottom setting up, with this area being the dimple area, and just some very simple rules in candlestick analysis. If you see a dimple in a fry pan bottom, usually the time frame from right here to back here will be about equivalent from here to out here. So as you can see, they started breaking this out right about that same time. And then once we have a fry pan bottom in progress, there's one simple rule. You can stay long as it doesn't close back below the T-line. And this makes simple patterns like we were seeing in PBYI very identifiable as a wave 1, a fry pan bottom breakout. Notice our doji sandwich breaking out into new territory, making the potential of this 20-point move starting from here, taking you up into the $70 area. And the same can be seen in XL, EXEL, J-hook pattern, telling us there's probably another wave to this one. The signals and patterns allows an investor to know when to buy, like in the crude oil chart. And then there's our sell signal, an evening star signal with stochastics in the overbought condition. Just those 2 factors alone tell us there's probably going to be a pullback, that once we saw that doji in the overbought condition, we had a very simple stop loss. That's the nice thing about candlestick analysis. The Japanese rice traders not only told us when to buy, but showed us where to put our stop losses, or our profit-taking stop losses. They're very simple visual mechanics of telling you when there's been a change of investor sentiment. That'll be it. We'll see you in the chat rooms.